Hi folks, so yeah, this is me again. So in this video we are looking at the NASDAQ CFDs. Obviously for me, I trade a contract for difference. This is the NASDAQ 100 on FX Pro. Okay, so looking at it right now, it's just it's like 7 minutes left before the New York Stock Exchange open. So it opens at 3:30 South Africa, 3:30 p.m. or 15:30. So what I'm looking at right now, I'm seeing that the market is going to come down here to engage anyone's stop that's resting below here, anyone's buy stop that's resting below here. So I mean sell stop, because anyone who went long, they would most likely have their protective stops below these lows on a 15-minute time frame, because they are relatively equal lows. It's much cleaner on this side compared to on the buy side. On the buy side, you can see it's been engaging. This would be buy side, it's engaged, buy side engaged, until it took a turning point. This would be buy side engaged, buy side engaged. So it's been poking in the upwards direction, but it's been leaving it clean and smooth on the sell side direction. Okay, so as you should know, that the market, it goes up or down for one of two reasons: to engage stops that rest below or above relatively equal highs or lows, or just a significant high or low. Okay, simpler terms. Or it's going up or down to mitigate imbalances, which are fair value gaps. The gaps that it leaves behind, it goes back to rebalance them. Okay, it goes up or down to rebalance those gaps. What am I talking about? When you look at this white shaded area, when I go over to a 4-hour time frame, this candlestick's high, this candlestick, it's high, this candlestick's low, this one, it's low, and this one that overlaps in between, it creates a gap, which is a fair value gap, a bullish fair value gap in this case, of course. You can see naturally you would expect the market to deliver higher prices when it gets to such signatures, but it does overshoot them. Sometimes it does overshoot them. Sometimes you do get clean fills and then it goes away. Sometimes you don't. And in most cases, when it overshoots them several times like this, it signifies downwards movement. It signifies a change in price delivery. It's going to be offering price to the downside. Okay, so hence why I'm looking at these lows to be engaged quickly at 3:30. Okay, since the New York Stock Exchange opens, the volatility comes in. Okay, so as I already mentioned, that it goes up or down for one of two reasons: to mitigate these gaps or to engage stops. So you could see here, I love the 15-minute time frame. I love the 15. You can never. I'm a day trader. See, I trade on a day-to-day basis. I look for opportunities every single day. Okay, so this is what I like to look for. Here, down here, what do you have? An imbalance, and it's most likely going to draw to this imbalance, and you are going to see how it's going to react. Naturally, when it gets here, it's supposed to go to the opposite direction, deliver higher prices. Same thing applies when it gets to a downwards fair value gap like this. Well, I won't get much into the terminologies, but a downwards fair value gap like this, when it retreats back into it, naturally you would expect it to deliver lower prices, like how it did here. So this candlestick, it's low, and this candlestick, it's high. This one that overlaps in between, it forms the gap. So you can see how to trade it back to it and start doing price lower. Doing what? Engaging anyone stop that's resting below here, anyone stop that's resting below here, and then trade it back to this. So fair gap closed above it, started delivering higher prices. Okay, so in this case, in this very moment, we have this guy over here. Okay, we have this guy over here, and I'm looking for it to trade back into this in a much quicker, because it always does it at a very high speed. Okay, gets to these signatures at a very high speed. What's going to do naturally, it's going to purge this, maybe stop here, go up, and then come back again, refill this thing, go up, come back for that time, and finally, if it's supposed to go up, it's going up, else otherwise it's going to close below this thing. If it does close below this fairly gap, I'm going to be interested in lower prices. And what am I going to be targeting? This low. Anyone stop that's resting below here, anyone stop that's resting below here, as these are relatively equal lows. Okay, yes, so it's like 45 seconds left before the New York Stock Exchange opens. So let's see what is going to happen. It's going to happen here. As you can see, we already have gaps within gaps. We have a gap within a gap. This 4 hour gap, and I already have this 30 gap. This one, which it could most likely trade back to it and then go down, deliver. This could act as the thing that supports lower prices. Could go back to it, sort of like a retreats. Okay, it retreats, refill these gaps, and goes back down. But naturally, I wouldn't expect this guy to fill set breakaway gap. I would expect after this has occurred, I would expect it to shoot down very quick, and that's what I'm expecting right now, for it to shoot down. Come here. Right. Okay, that's fine. It's going to get down here. It's going to do it, and it's going to do it at a very high speed. So, okay, so it's forming like relatively equal lows. So it's liquidity over here, short term. Definitely it's going to get taken. Okay, watch how it, I want you to notice how it reacts to the very low of this bullish fairly gap. Look how it kisses it and moves away from it. Look how it kissed it here, then started moving away from it. Look how it okay, well, it overshot it here, but still, you see how it started moving away from it. See how it touched it here. It's like 50%, started moving away. You can see how the nature of it, you can see how it reacts when it gets to these things, to these signatures. You can see how it did here, 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 here. This was very clean. Okay, look how it's going to do it there. Okay, it's beautiful. It was clean. Okay, see how clean it reacted, or rather, when it got to this point. Not saying it's now going down. No, it could start going down, or it's just respected for temporarily on a lower hour time frame, it's busy kissing this thing to send it higher to get back to this, and it's then selling price lower. Or if it doesn't go, it may not, it may decide to not go down, but I strongly believe it's going to get down here, engage this, and trade back to this. And from there, it's going to start delivering higher prices. Okay, so this would be your anticipated buying area. Expect it to get here. And what would you target if you buy here? Target these highs, these highs, these highs. Okay, that would be your ideal points of interest. Let's mark out this. Go over here. I hope you notice what it is that I'm highlighting here. Okay, I want to take the 50% of it. This should be it. I want to take the 50%. And I'm simply going to remove my fib. Make this guy over here dotted lines. Okay, dashed. It's fine. So this is a bearish fair value gap. It's a potential area to enter your sell positions. It's a very good area to sell. Okay, this one right here, for it to go where, to come down here. By the way, this is happening live. This is a live market. This is the time, and I'm tape breathing this live. Okay, doing it live. So this is what I would expect. Oh God, I don't usually use most of the things here. That's why I'm all over the place looking for them. But yeah, interesting what it did there. It's interesting what it did there. So to it's interesting. Now this guy here could become inverted. Yeah. Could become an inverted fair value gap. This one start going up, or could stick to our original bias of getting down here. Okay, so this would be our short positions. Stop loss just a little bit above there. So we would target. Okay. Oh well, got a hit. And before we start on 15. It's a bullish one, so let me put a plus sign here. Okay. Okay. Our value gap seems to be holding strongly to me, although it was very, very dramatic. Still overshooting it this much for it to continue going up. It's very dramatic. Okay. I'm going to stick to the original bias. I'm still seeing a potential downwards movement. By the way, I'm not trying to be I'm not trying to prove that I was correct about my bias. Just this how it gets when you get to familiarize yourself with these things a lot. So it become my inverted fair value gap, meaning naturally you would expect this to deliver higher prices, but now came back to it, tested it, overshot it, traded down, started closing down below it. Now it becomes inverted. That's the idea behind it. So this is another opportunity to enter sell positions. It's another opportunity to enter your sells. Okay, because it already came here. Would be entering at where it currently is. Okay, and I'll stop not above the high, because if it trades above this thing, it's definitely going to take out these highs. So you don't want to put your stops above the highs, as it's going there anyway. Yeah, just submitting yourself to being stopped out. Okay, that would be our entry point right there. Our target all the way down here to this, and then when it gets here, that's when I could start looking for buying opportunities. I'm really confident with buying here. I believe that overall, after everything that had happened here and got here, down here, it's definitely going to start delivering higher prices. I'm not interested in this upwards movement for now. I'm interested in seeing it getting down here. Then that would be a very clear signal for me to go long. Okay, I believe so much in the 15-minute time frame. Yeah, it's just how it is. Anyways, you'd enter more position. I would enter more positions there, but not looking good. It's not looking good. What it done there, it's not looking good. But as I said, it doesn't make sense for you to put your stop loss above this size, because if it does close above this thing, it's definitely going to take out this size. So you don't want to submit yourself to that. So you know that aftermath, you know what's going to happen already. So that was our entry right there. The time. I don't want to mess that up. Okay. Still interested in seeing it go down. Still interested in that. All of this is happening live, guys. It's an open market, live market. Okay. And this is what goes on a day-to-day basis when I'm looking at the market. Now what day traders do, they look for opportunities. I think it's going to get hit, the stop loss here, and if it does, just sit and watch what happens. Start looking for, just waiting, because unless it shows me a clear signal on a 15-minute that it's going to, if it forms another bullish fairly gap within this range here, and anything that exists after this point, this minimum fail, this point, this extrema, okay, it did get hit. Now it's definitely going to engage these highs. It is definitely going to engage. This would be our buy side liquidity. It's definitely going to take out these guys over there. Top left, blue. Ugh. I'm going to remove this. Yep. So now you see, if it takes out this, okay, takes out this major high up here, and then from there I wouldn't be interested in, even if it does get here, then I would be expecting it to continue to overshoot this thing and continue delivering lower prices. Okay, now we also have this guy over here. It's going to get engaged. That would also be a buy side liquidity. Okay, this the buy side, that's the buy side. The idea, the reason why it's selling price this high is because of this guy, nothing else. Okay, it's because of this gap. You can see how perfectly it closed. It opened above, it closed above it here, and how it opened above it here. Definitely selling prices higher. Also have let's see what we have on a 5-minute. To get purged, that's on here. Okay, I want to highlight something here. Just stop. Go on a 1 minute. Let's see what happens on a 1 minute time frame. Okay, it's been delivering higher prices, evidently. It's been delivering higher prices, and it's going to continue to do it. As far as I could tell from this point, it's going to continue to do it. It's going to take out this guy now. Now, you see, if it goes against me in this case, I do not want to be looking at it anymore for the rest of the day. If it fails to just get up here, I don't think it's going to fail. Let's see how it came back here. The 50% cast it clean and then should higher. Yeah, now we are commentating these things live. Okay, we are calling these things live. Okay, so this thing happens every day, so we are going to be calling it live every day in the video. Okay, obviously I'm not going to I might be live on YouTube if I get a huge following, knowing very well that a large number of people are going to be watching me, maybe commenting live, commentary live. But as for now, my channel is not that big, so there won't be any live videos, live commentaries, or anything like that. Just you're going to get the videos are going to be recorded during the moment and uploaded after. Simple as that. Right? Perfect. I'll be entering long positions right there. Put my stop just below this candlestick here, because we also have this guy over here which it might potentially reach into. Now target simply that guy over there, this high over there. Okay, well, it's not a very big unlike the initial entries. This guy would just be to recover the losses that stops out on the two trades. Okay, just that. See how it should shut back into this. I did mention that I was going to put my stop here because we have this guy over here which it might potentially get into, and it did. Now I expect it to go all the way up here. Then that would be it for the day. Or maybe post NYSE open just around 5:30 my time here. Around 5:30 I'll be looking for other entries as well. Interesting. what it does here. Interesting what it does here. Hmm. Hmm. Okay, that's it for the day. Like literally 3 trades, 3 attempted trades, all 3 failed. Okay, all 3 trades failed. So I'll be just sitting here and watch what happens. If I be greedy, start entering here, targeting this guy over there. But it's not a good idea, right? Wouldn't